Most people start a business with dreams of freedom. Freedom of time, freedom of money, freedom to live life on your own terms. But there is one silent killer that creeps in, unnoticed at first until it is too late. That killer is taxes. Not taxes themselves, but the act of ignoring them, underestimating them, thinking you can deal with them later, thinking you will figure it out when the money starts flowing. That thinking has ended more businesses than bad marketing or weak products ever could. You do not need to commit fraud to destroy your business. You just need to be disorganized. You just need to forget a few quarterly payments. You just need to misclassify your income or fail to track your expenses or mix your personal and business accounts. And before you know it, the IRS is not just knocking. They are choking the very cash flow your business runs on. They will freeze your accounts. They will garnish your revenue. They will shut you down. All because you did not put taxes at the center of your strategy. This is not about fear. It is about control. Because once you understand how taxes work, once you respect their power, you can use them. You can shape your business around tax efficiency. You can protect your cash flow, grow faster, reinvest smarter, and sleep at night knowing the government is not waiting to take a bite out of your future. Let us unpack how ignoring taxes destroys entrepreneurs and how the smartest business owners fix it before it is too late. The cash flow mirage here is how most businesses fall into the trap. Revenue starts coming in. You feel like the business is finally working. You are selling. Clients are paying. Maybe you even land a big deal. The numbers in your bank account start looking good. So you make a move. You hire someone. You upgrade your gear. You get a nicer office. You invest in ads or launch a new product. But here is the problem. What is in your account is not all yours. If you are not withholding taxes from every dollar that comes in, you are spending money that belongs to someone else. The government. And they are not forgiving. They do not care if you did not know. They do not care if your expenses are higher than your income. They do not care if you already spent it. When tax season comes, and it will, you suddenly realize you owe tens of thousands of dollars you do not have. And that is when panic sets in. You scramble. You borrow. You sell assets. You try to make deals. But by then, it is too late. The cash flow you thought was growth was actually a mirage. Because taxes were never subtracted. The numbers lied to you. And that lie breaks businesses every year. Smart business owners fix this by treating taxes like a fixed expense. They do not wait for tax season. They set aside a percentage of every dollar they earn, monthly, weekly, sometimes daily. They separate it into a tax account that is never touched. That money is already spoken for. So when the tax bill comes, they do not flinch. They plan for it. They stayed in control. The audit risk you did not see coming. Most small business owners think audits are for the rich, for millionaires, for corporations. But in reality, one of the most audited groups in the country are small business owners, especially sole proprietors and LLCs with high income and little documentation. The government is not stupid. They know many entrepreneurs play fast and loose with their bookkeeping. They know most people do not report all their income. They know deductions are often exaggerated. And here is the twist. When you get audited, it is not about proving guilt. It is about you proving innocence. If you do not have records, receipts, statements, logs, they assume you are lying. They will reclassify your income. They will disallow your deductions. They will penalize you not just for underpayment, but for negligence. What started as an honest mistake now becomes a five-figure fine. In some cases, worse. Your business credit tanks. Your reputation suffers. And if you cannot pay what they say you owe, they can lock down your business account without warning. All because you did not take documentation seriously. The fix is boring, but powerful. Track everything. Use accounting software. Save digital copies of receipts. Categorize income and expenses clearly. Work with a tax professional, even part-time, who can check your records. You are not just protecting your money. You are protecting your right to run a business without constant fear of audit. The entity structure trap. This is the silent mistake that separates struggling businesses from thriving ones. You started as a sole proprietor or a simple LLC because it was fast, cheap, and easy. But as your business grows, that same structure becomes a liability. You are taxed at the highest rate. You are missing out on deductions. You are personally liable for lawsuits. And you are paying self-employment tax on every dollar of profit. Many entrepreneurs do not realize how much money they are giving away simply because they chose the wrong business structure. They hit 6 figures in revenue and still pay like an employee. They think switching to an S corporation or C corporation is too complicated. So they stay small, they stay inefficient. And every year, the tax bill gets bigger. But the right entity structure does not just lower your tax rate. It opens doors. It lets you pay yourself a salary and take the rest as distributions. It gives you access to retirement plans, healthcare benefits, and business deductions that sole proprietors cannot touch. It gives you leverage in negotiations, credibility with investors, and layers of protection from lawsuits. Fixing this starts with one conversation, with a CPA or tax advisor who understands business growth. You might need to restructure. You might need to file an election. You might need to reframe how you think about your business identity. But the result is clarity. You stop bleeding money. You start playing the tax game like the pros. And you feel the difference within a single fiscal year. The "I'll handle it later" delusion. This is the most dangerous mindset of all. I'll deal with taxes later. I'll hire someone when I make more money. It is not a priority right now. These sentences are the reason businesses die with a pile of IRS letters on their desk. Later becomes never, and never becomes expensive. Here is the truth. Every month you wait to get your tax life in order costs you, sometimes in penalties, sometimes in lost deductions, sometimes in pure financial stress, because you are always guessing, you are always unsure, you are never confident about how much you really earned, or how much you can spend, or what you will owe next quarter. But once you stop avoiding it, once you make taxes part of your monthly routine, everything changes. You start running your business like a CEO, not a freelancer. You understand cash flow. You make informed decisions. You know where you stand. And most importantly, you are not afraid of tax season anymore. Fixing this does not require perfection. It just requires progress. Start tracking. Set up a separate tax account. Use simple software. Meet with a pro once per quarter. Pay your estimates on time. It will feel hard at first, but the peace of mind is worth it. Because later is how businesses get blindsided. No, is how you build something that lasts. Turning taxes into a wealth strategy. Once you have handled the basics, once you are no longer afraid of taxes, something strange happens. You start seeing taxes as a tool, a way to build wealth, a way to accelerate your goals instead of just survive the system. Because taxes are not just about payments. They are about planning. You can use your business to buy assets. You can use depreciation to lower taxable income. You can invest in employee benefits that reduce your personal tax burden. You can contribute to retirement accounts that grow your wealth while cutting your current taxes. You can hire your kids, buy your vehicle through the business, travel for work and deduct it legally. Because the tax code is not just a punishment system. It is a blueprint for behavior. And when you align your business strategy with the tax code, you do not just avoid problems. You build faster. But none of this is available to the entrepreneur who avoids taxes. None of this works for the business that is always scrambling. These strategies only open up once you are organized, consistent, and strategic. Once you stop seeing taxes as a threat and start seeing them as a game you can win. Here is the bottom line: ignoring taxes will kill your business. Not all at once, slowly, quietly. Like a leak in the hull of a ship that sinks you in the middle of calm waters. But the fix is in your hands. It starts with respect, with paying attention, with building your business around tax intelligence instead of tax avoidance. You started your business to be free. Do not let taxes become the chain that holds you back. Handle them, master them, and you will not just survive, you will scale. You will protect your wealth. You will sleep at night. And you will have built something worth passing on. And if you are ready to level up your business even further, especially in ways no one is talking about, watch the next video. Because if you think taxes are powerful, wait until you learn how the structure of time can multiply your business like compound interest. Do not miss it.